All right. Representative Brown,
Present.
Representative Campbell,
Here.
Representative Lean,
Here.
Representative Lucas, Representative Riggins,
Excuse, sorry.
Representative Storer,
Here.
Representative Stivar,
Present.
Representative Worf,
Here.
and Chairman Locke.
Present.
We have 8 present and 1 excused, Mr. Chairman.
Okay. We've got 3 fairly simple bills we're going to go over today. Just before, I guess I don't want to torture this room with the decorum speech. I think everyone in this room has been over this more times than they care to think. So we won't torture you with that today. I do want to welcome you all here. Thank you so much for being here today for our committee meeting. 3 fairly simple bills. The first one we'll go over is House Bill 40, Sales and Use Tax Revisions. The second one will be House Bill 39, Property Tax Refund Program Revisions. And the third will be House Bill 38, Ad valorem taxation payment and credit penalties. And most of these were originally created for basically to do some conforming language changes to these, in these different areas of statutes. So we'll go ahead and get started with House Bill 40, Sales and Use Tax Revisions. And Department, if you could come up to the chairs and help us out just a little bit. Thank you so much, and go through the bill. That'd be great. Thank you, Director.
Good morning, Mr. Chairman. Brenda Henson, Director of the Department of Revenue. Good to see you all this morning. As stated by the chairman, these are conforming bills, all 3 of them. We'll start with House Bill 40, Sales and Use Tax Revisions. You may recall, some of you, that House Bill 197 passed the body, and basically the language within this bill and the House Bill 197 was the culmination of 2 years of interim work. It was where the chairs of the Revenue Committee came to the Department of Revenue and asked us, where could we create some efficiencies, some clarification, just update some language, with the focus being on the vendors. As you know, with sales and use tax, we work with the vendors across the state of Wyoming. With sales and use tax, the tax is paid by the taxpayer, which is the customer. Then the vendor, in partnership with the state of Wyoming, collects the sales tax, remits it to the Department of Revenue, then we distribute it to the taxing entities based on the distribution formulas that the legislature puts in place. So it really is a partnership between vendors and our office, and what we brought to the legislature starting 2 years ago was, where do we get the most questions? Where's the confusion at for vendors, and how could we make it clearer in statute? House Bill 197 did that. It was passed, but unfortunately, one thing that was overlooked in our statutes in Title 39, Chapter 15 are our sales tax statutes, Chapter 16 are our use tax statutes. They mirror each other in many, many cases. And what happened with House Bill 197 is the changes that were made in the sales tax did not get made in the use tax. And so that there's some inconsistencies there. So everything that you see in House Bill 40 is the exact same language that you have in Chapter 15 as a result of House Bill 197. So if you change anything in this bill, it would be important to note that we really need to then go back to what we did last year and update that as well. So as you look at the bill, looking at page 1, just some clarification, turning over to page 2 in what is a vendor? And this language historically just so you know, it was always the discussion about the lemonade stands. Are we collecting sales tax for lemonade stands? How about that garage sale that only happens once every few years? And my testimony as Director of Revenue is, no, we are not reading the newspaper. I am not sending my staff out to collect sales tax for lemonade stands and garage sales. However, there's really nothing in statute that says that. So that is what the language on page 2 is intended to clarify. We had the language that changes on page 3 on exemptions. Just clarifies you don't, that what, why did we have if for sale or lease? It just struck that language. Turning over to page 4, on the licensing, on the vendors, we just clearly stated that any out-of-state vendor not authorized subject to this article may voluntarily register. Let me explain why that was such key language last year and has impacted, provided clarity to the vendors and provided guidance for my staff. In Wyoming, prior to House Bill 197, and this language, anybody could voluntarily license to be a vendor in Wyoming for sales tax purposes. Here's what was happening. We have vendors that were coming to Wyoming, licensing with us, never intending to collect Wyoming sales tax. But it gave them the opportunity for a sales tax exemption certificate for wholesale for resale. So they were using exemption certificates, and also online retailers were allowing them. It basically gave them credibility as a vendor. Many foreign countries were the address of these vendors. What this statute did is say, if you don't qualify to be a licensed vendor in Wyoming, meaning either you're located in Wyoming or you're going to have at least $100,000 worth of taxable sales in Wyoming, then you can't volunteer to be a vendor. And that has really helped us. It went into effect July 1 of 2024. And some of the discussion you may hear in Corporations Committee that talks about corporations and things like that, deleting this paragraph took care of that situation for licensing vendors for sales tax purposes when they did not intend to ever collect and remit sales tax. So that was key. This is just cleanup language. On the page 5, you'll see a discussion about payment. This has to do with sourcing on motor vehicle sales tax and providing clarity that to which county should that sales tax be sourced to. And it just states that as indicated on the owner's driver's license or other government issued identification. Just if, you know, and then what we did in addition to that, so that clears it up for a private transaction. For a commercial transactions where you may have a commercial company that is in multiple counties, what we've done is we've created a form that's within our Department of Revenue rules where the purchaser fills out the form and states where their office, their home office is located at. But that clarified that for the private sales. With that, then I'll turn your attention to page 6. As you read the stricken language, this is our vendor comp statutes, and this is where it was somewhat confusing. As you could see, what the language that is stricken says for the first $6,250 of tax due, the credit shall be 1.95%. For any in excess of that amount, then the amount is 1%. What this does is it just clarifies it. And it just says, okay, we don't have these two benchmarks for vendor comp. It's one calculation. And we did program our system to incorporate this language, and that has been in place since July 1st. So now we're just trying to make sure the use tax conforms with how we're doing sales tax. Taxpayer remedies on page 7 and 8 is talking about refunds. And this is just to clarify on the refund request. If there is a Department of Audit that is, if they're doing an audit of that particular taxpayer, then that tolls this 90-day period. That was happening in practice, but not allowable in statute. So that clarifies that situation related to refund requests. The section 2, the repealers, we had a lengthy discussion over the last couple interims related to reports that the Department of Revenue was required to compile and provide to the Revenue Committee. And this was in consultation with other state agencies. But what we had is a situation, and this was for data centers, the broadband, the manufacturing exemptions. Previously, there were the rolling stock for rail cars. These were reports the Department of Revenue provided to the Revenue Committee. But unfortunately, we would send out surveys to companies and ask them what those exemptions, sales tax exemptions, did they take advantage of them? How much did they not pay in sales tax that they would have had to have paid had it not been for the exemption? And then it also had a lot of demographic information. How many employees do you have? All of these things. The intent was legislatively, and why those reports existed initially, was so the legislature could see, are these sales tax exemptions for economic incentive having the end result that we intend them to have? Unfortunately, because there was no statutory requirement that these companies report to us, our survey results were very, very limited. In some instances, because we only had 1 or 2 companies that provided any information, you could actually determine which companies those were, and that is not what the intent of the reports were. So a small committee was formed that looked at, is this statute really where we want to go, or do we want to approach this in a different manner? And that's really where we're at today. This repealed those reports that quite honestly took days and days, postage, sending out surveys that we weren't getting responses for, days of compiling for my staff, only to tell the Revenue Committee, you really can't count on this data because it's not complete. So it's still an opportunity that I think the legislature has to look at that perhaps in the interim as to what would be a better format. And if it's an exemption for economic incentive, should there be a requirement that all of the companies that are benefiting from that exemption are required to report, whether it's to the Department of Revenue, maybe it's to the Business Council? Where is it should that report be? We're really not in the business of analyzing the economic impacts of companies. We're tax collectors at the Department of Revenue. And so that's what that repealer was. And with that, Mr. Chairman, I would stand for any questions on what
Thank you,
this bill
Director. Any
does.
questions for the Director? Representative Lean?
Thank you, Mr. Chairman. Thank you for coming today, Director. I have a question about the driver's license as identifiable. So say we have a student that is from Casper and they're going to school in Laramie, they purchase a new vehicle. They're residing in Laramie. Does Albany County get that tax, or does that go to Natrona County?
Mr. Chairman.
Thank you,
Representative Lean, it would go to wherever their driver's license, it provides that clarification. So wherever their driver's license says that they, whoever the owner is. Now, that's the other piece. Who owns the vehicle? Mom and dad or the student? And so this just provided guidance because what you just asked is exactly what we were being asked. Where's that sales tax to be sourced?
Other questions for the Director? Representative Seibert?
Thank you, Mr. Chairman. Director, in the very beginning, and I didn't write it down, so You said Title 39 and Title 36? 19 and 16?
Mr. Chairman, Representative Stivar, in Title 39, Chapter 15 relates to sales tax, Chapter 16 relates to use tax.
All right.
That's why you'll see all of these are related to the use tax
I
piece.
just wanted to make sure I had that right. This is Title 39.
Thank you, Director. Other questions for the Director? Representative Ward?
Yeah, thank you, Mr. Chairman. I guess the one question I have that I struggle with, you said that this mirrors the other section and that this was changed. The changes were made in House Bill 197 last year. And I guess it seems like to me, we should have done this all at the same time. Can you explain, maybe help me understand how we got in a situation where we passed a bill that dealt with one side, but it didn't deal with the other concurrently?
Go ahead, Director. Thank you.
Mr. Chairman, Representative Worf, it was an oversight. And this was pointed out by the Legislative Service Office, and then we confirmed that that was the case. In fact, during the interim, there was some discussion of how could we reduce our statutes, and that there is some confusing, first of all, those that are reading our statutes may not understand the difference between a sales tax and a use tax, and so they're not sure which chapter is applicable. There was some discussion in the interim that perhaps we should combine 15 and 16 in our statutes and just have one sales and use tax statute so that this situation does not occur in the future. And I think that that would be an excellent interim topic for this committee.
Representative
Just
Ward?
to follow up, Mr. Chairman, I know when I was here the last time, I was faced with a very similar situation where it's a different committee, but we were told that the bill had been passed by the prior committee. And that this was a committee bill, and they said, you just gotta pass this because it brings everything back in line. Well, I hate to say it, I felt like I didn't do my due diligence. I followed the lead of my chairman. And we passed that. The very next year, they came back and said, we still have these problems we gotta fix. And I guess that's the concern I have. I don't like the fact that a prior session or a prior group of legislators made changes. Now we're asked to mirror those changes, and none of us were here when those changes were made. So,
Director, please.
Mr. Chairman, Representative Worf, I would just encourage you to look at 197, House Bill 197 from 2024, and just page by page, and you can verify that, in fact, they were the same. But you're right, there was a great deal of discussion during the 2024 session and the two interims before. So just encourage you to take a look at that if you're concerned.
well, and thank you, Director Henson. I
Representative
wish I would have known that before because it would have made this so much easier. But I do appreciate that, and I will go look it up just because I can tell you I did not like that happening to me. And it doesn't reflect on you or anything else. I'm just saying, to me, that's always a problem. It's like, well, we already did this, now we're just catching up. So, thank you.
And Mr. Chairman, I
Director.
take full responsibility as well. I should have caught that last year. It would have been much easier and much more efficient to handle the statute changes in 16 in 197.
Any other questions? Director or Representative Lean?
Thank you, Mr. Chairman. Just a clarifying question. I know you mentioned lemonade stands and garage sales, and in this piece of legislation, there is something that says 3 times that you shall be exempted within a 12-month period. For those students in my district that set up a lemonade stand in June and then carry it over multiple weekends throughout the summer, at what point are they obligated to do the sales and use tax?
So, Mr. Chairman,
Director.
Representative Lean, it would be the 3, and there is some additional language within our Chapter 2 rules for the Department of Revenue that would provide additional guidance on that.
Any other questions? So just a question that I have for you, Director, and I'm just clarification because, I think this is the bill that we went over probably in Casper, like a year ago or whatever it was, or maybe it was longer than that. I sort of lost track. But I wanted to ask, because those reports, because that issue sort of came up again just this year. Just on those reports, this is repealing all of the requirements for example, for those those reports where you're sending out, trying to get those exemption reports. The part that I guess that I didn't recall was, and it was probably discussed, but I'm just trying to go back there. So conceptually, the reason for you guys not doing these reports, A, it wasn't effective, no teeth in the legislation, so the concept was we've got to come up with a better way. When was that committee put together? When did they do their work? And I'm just trying to go back to that because I do think the only issue I have with repealing it here, and I understand why we're doing it, of course, but it is an issue that needs to be addressed, and us ignoring it's my problem. So your thoughts on that, please.
Mr. Chairman, great feedback. And those entities, let me go back. So it would have been 2 years ago that it was a group of representatives from the companies that benefit from the exemption, the business council, just lobbyists in general, trying to determine what would be a better approach. Should it be a standalone independent report that talks about the benefits of economic incentive exemptions? And quite frankly, for whatever reason, at the time, there were 4 exemptions that required these reports, those that I mentioned before. But we've got many other exemptions on the books for economic incentive, and both in sales and use tax and in property tax. And so my position has always been, if in fact you're going to, as a legislative body, provide an exemption, what is it you're trying to achieve by having that exemption? And coming back, I am a proponent of having some sort of a report that says, and part of the reason is because we continually at the Department of Revenue are asked to provide, what does that exemption cost? Well, we don't know, because as I mentioned, the process for sales tax at the beginning, the data center, the manufacturer, they're the taxpayer that's buying something from a vendor. We're getting reports from the vendor, not the taxpayer. And so for us to provide what do these exemptions equate to, we don't have that information because that vendor's selling to a lot of folks. And so it would be beneficial for us to have information that we could provide both to the legislature and to the public. But is the appropriate place to gather the demographics, the jobs, all of that type, is that really the Department of Revenue? Or should that be another entity that, we can give them tax information, but like I said, it's not apples and apples. And so to your point, I would encourage the Revenue Committee to make this an interim topic and start looking at economic incentives and how do we quantify, and are they having the intended result?
Thank you for that feedback. That's actually was where I was going. I think this interim topic is very critical because all of these exemptions, both audit, a relatively continuous audit, where we're at least looking back and say, why did we do it? When did we do it? The problem is we kick these out with sunsets. Everybody at this table's gone sometimes when those sunsets hit, and we have nothing backing that. But I realize that's far beyond the scope of this bill directly, but I just wanted to get your opinion, and I think the interim topic concept is a good one. But thank you for their feedback on that. That's good.
Absolutely. And Mr. Chairman, just so you know, there was the discussion. Do we put teeth and just require those companies? Do we put some sort of a penalty on them if they don't respond to the survey? Or do we go down this path and explore other options? It was the legislative decision last year that we need to step back. The information, and I encourage you, all of those reports historically are available on the LSO website. If you don't have access, Mr. Fanning would be happy to send those out to you. But if you read those reports and you look at the response rate and the information that is contained, which is the information that statute required, if I were in your shoes, I would not feel that I had the information necessary to determine whether that achieved the intended purpose.
Thank you,
Mr.
Director.
Chairman.
Other questions? Representative Brown?
Director, on page 6, line 12, through the end of that revision, if a person has 3 or more garage sales, say they have an estate sale, someone in their family passed away, and they end up getting revenue of over $6,250, they'll have to collect or they'll have to collect taxes, correct? Not property taxes, I'm sorry,
Yeah.
Director?
taxes.
Mr. Chairman, Representative Brown, this language relates to vendor compensation. So we pay our vendors to collect the state of Wyoming's tax. And that's what this is related to. It's not related to intermittent sales.
Representative Brown?
I'm going back here, trying to find this real quick. Please pardon me, but it says, so on page 3, and it starts on page 2, but it's talking, and it says vendors, but it says 3 or more. Technically, they could say someone having a garage sale is a vendor, correct?
Director?
Mr. Chairman, Representative Brown, now keep in mind, everything that is not underlined, that's current law, has been current law, didn't change in 197 and doesn't change in this bill. It's just the definition of the language on page 2, lines 14 through 18, that we believe provided that clarity that says they are not in business of selling tangible personal property that is subject to taxation under this article if selling is not habitual or regular activity of that person. The other language is current law and has not changed.
Representative Brown?
So, Director, you're telling me that these 3 sales that we're looking at on this other page is not saying that a person who's doing garage sales would be considered that person? Or is that what you're telling me?
Director?
Mr. Chairman, Mr. Fanning, obviously I'm not communicating very well, so I'm hoping another person
Thank you, Mr.
articulating
Fanning.
this will
Please.
help.
Please explain.
Sure. Thank you, Mr. Chairman. Members of the committee, Brett Fanning, I'm the Excise Tax Administrator at DOR. And so on page 2, carrying over to line 3, this is just the definition of our vendor as it relates to use tax statutes. So when we come in here and we take a look at line 22 on page 2, vendor also includes a person who engages in regular or systematic solicitation of 3 or more transmittance of advertisements. So this is completely different than us trying to license vendors who have only a couple sales in a given year. So we do have clarity in our rules, Director Henson outlined, if you just have a couple sales in the state of Wyoming, you don't have to license with us as a vendor. Now, you may have to collect tax on those. You may have to collect tax, but as far as the licensing requirement where you've got to pay your $60 fee and continually report to us, that's a whole different conversation than if you just have a couple advertisements here. 2 different discussions, really apples and oranges there. So hopefully that helps, Mr. Chairman.
Thank you, Mr. Chairman.
Representative Lee?
Thank you, Mr. Chairman. Director, thank you for your transparency and your accountability. That's really great. And I appreciate that you're willing to do that. I was wondering if you could give me an example of some of the conflict that has happened within your department between chapters 15 and 16 not aligning.
I'll defer to.
Yeah. Mr.
Ms.
Chairman,
Fanning.
Representative, yes, absolutely. In the most general of sense, though, House Bill 197, as Director Henson, was really very clarifying for our vendors and for our taxpayers. Now, here are some of the items that would come up if this legislation were not to pass and to be going forward. On page 2, lines 14 through 18, generally not going to apply to use tax statutes. Most of these folks, lemonade stands, garage sales, but other vendors are going to be charging sales tax. So again, as Director Hansen, really just clarifying on this side on page 2. On page 3, line 23, dealing with the manufacturing exemption. Really what could happen is there were 2 qualifiers in manufacturing exemption, and we outlined this last week, I believe. 2 qualifiers, you had to have a certain NAICS code and you had to have a certain depreciable asset with Internal Revenue Code standards. This would technically, without the passage of this, say that for sales tax purposes, you don't have to meet those qualifiers. But if you were reporting use tax, you would. And we quite honestly can't administer that, because as Director Henson has mentioned, all of this tax gets reported to us kind of all in one bucket. And it's hard for us, and it's really hard for the manufacturers to distinguish the difference between sales and use tax. They know tax is due on certain things. Is it classified as a sales or use tax? Really kind of a different discussion there. In most general sense, if the tax is paid, the state of Wyoming and our local partners that's really what we're caring about there.
Does that cover your question, Representative Lee? Okay,
Ms-
thank you.
Yes, if there's other examples, I'd be more than happy to talk to you.
So any other questions for the department? Okay, anyone else like to speak on this bill? Fair enough. I would have been surprised if someone did. Okay, in that case, let's go ahead and close public comment and question. Okay. Representative or Vice Chairman Stivar's moved, and Representative Worth is our second. Perfect, okay. Any discussion before we start? Any discussion about the bill? Any amendments? Oh, any discussion? Representative Lean.
I was just gonna say, I think for the constituents that are gonna end up using this, I think it's important that the language match, but in the interim, we have the opportunity to review it and see where we're going.
Representative Lean, I agree. I think that one point at the end, I think that's something that we probably should put in as an interim topic, and so I want to make sure we take a good note on that. Make sure we do that as part of this committee. Thank you. Any other questions or discussion on this? We can step through real quickly, any amendments? Page 1, 2, 3, 4, 5, 6, 7, 8, and we got out clean, and so that's good. Okay, okay, then let's go ahead. Donna, if you could call roll, thank you.
This is a roll call vote on House Bill 40, Sales and Use Tax Revisions. Representative Brown,
No.
Representative Campbell,
Aye.
Representative Lean,
Aye.
Representative Lucas. Representative Riggins,
Excused.
Representative Storer,
Aye.
Representative Stivar,
Aye.
Representative Worf,
Aye.
Chairman Locke.
Aye.
Chairman, we have 7 aye, 1 no, and 1 excused.
All right, so House Bill 40, Sales and Use Tax Revisions has passed. And I will probably coordinate with the committee on someone who will carry this one to the table, but we'll talk about that, or carry to the House floor. Let's go ahead and move ahead on House Bill 39, Property Tax Refund Program Revisions. Department?
Again, Brenda Henson, Director of the Department of Revenue. Property Tax Refund Program. Again, this was a Joint Revenue Interim Committee bill. And this bill basically is cleanup language. You may recall last year, the legislative body passed a bill, Property Tax Refund Program, that created 2 additional tiers for the Property Tax Refund Program related to income and related to the refund that was available to taxpayers in the state. Prior to last year, the maximum income amount that you could make was 125% of median household income for the county where your property is located or the statewide average median income, whichever is larger. Last year, the legislature passed a bill that added 145% tier of income and 165% tier for income. Now, they did reduce the amount of the refund by those tiers as well. What you have before you in House Bill 39 is the result of the governor's line item veto on last year's bill. On last year's bill, he took the opportunity to eliminate the refund portion of the up to 165%. He was able to strike out the language that provided up to the 165 for the refund portion and what that refund would be, because he could strike that out. Unfortunately, in a strike-up, a line item veto strike-up, he could not add the language that you see on page 2 and on page 4 that talks about not to exceed 145%. He couldn't add that language in the line item veto. He could only strike out, and he did. He eliminated any refund for that between 146 and 165% income. All of that language was eliminated, but he had to leave this up to 165%, which is confusing to our taxpayers because the 165% is still in statute, but there's no refund that's available for anything above 145% of median household income. So this bill simply conforms to the governor's line item veto from last year. And there's no fiscal note associated with this. It doesn't change how the program is administered going forward. We will administer the property tax refund program for 2024 refunds, which are the applications that we take this year, just like we did for 2023 refunds last year. And I stand for any questions.
Any questions for the director? Representative Storer.
Thank you, Mr. Chairman. I just thought for the new members of this committee to understand why we did this originally. So when we passed the refund program and expanded the refund program in 2023, it meant that if you had an income, household income at 125% of your median county income, you would get 100% of the refund allowed. But if you made $1 more than that, you wouldn't get it. So the concept behind this idea was to kind of stair step down what you would get as a refund as your income went up. The bill actually we worked it in interim. It had actually several steps. We simplified it down to 2, and then the governor chose to take out the higher income one. So this is really just a cleanup, as Director Henson said, in the language to clarify. Thank you.
Any feedback?
Thank
to
you,
that?
Representative Storer. And if the committee is interested in knowing what the refunds were for the 2023 refunds, I would encourage you to go back to a presentation that I provided in November of 2024 to the Revenue Committee. There's a report that looks like this. And what we did this year is we actually broke out so that the legislature could see how many applications did we receive and how many refunds did we send out that were at that original 125% of median household income? And how many applications did we have and send refunds for that 126 to 145%? And just for your own information, I'll just read it. So we had 14,782 applications that were less than the 125%, and we sent out 12,406 refunds for a total of a little shy of $13.5 million in refunds. Then when we go to that second tier, we had 1,079 that were approved for a total of $790,000. So you definitely see when you go up to that higher income level. And my hypothesis is the reason that the higher the income level that you can have, that the asset test is, it still remains the same, that 156,000 per adult member of the household, excluding the home that you're receiving the refund on your taxes, and one vehicle per adult member in the household, and also any retirement plans that you've got are excluded in that. But other than that, the higher the income levels, typically higher their assets are. And so higher those numbers are, we see less people that are applying because they don't meet the asset test. So with that overall, we had a total refund last year, $14,269,323.88, with an average refund for 2023 property taxes of $1,058.16. But this is per county. If you're interested, you're welcome to go out and take a look at that report.
Thank you, Director. And I just want to add to the clarification. So I don't know that it came out clearly. There were the three categories. You described that. It was 125% of median, 145%, 165%. With that stair step, he struck the 165%. So the two that remain is 125%, and then for 100% of the acceptable. And then the 145% of the median household is 65%. Is that accurate?
Thank you, Mr. Chairman.
That's-
I neglected to provide that.
No, I wanted the new members just to understand, those two tiers remain. And I couldn't remember the exact number, so clarification. But I just want everybody to understand what remains in the process. And he took out that third tier, which ended up being like 25%, so it struck it out. That way the new members know exactly. Thank you for bringing that to our attention. Any other questions for the director? Okay. Anyone else who would like to speak on this topic? Okay, we're having an easy day today. That's good. All right, committee, how would you like to, I'll close public comment, I'm sorry.
Move the bill.
And moved by Representative Lean,
Second.
seconded by Representative Storer. Okay, committee, let's work this bill. Any discussion, any amendments? I'm not going to go page by page on this. It's about as easy as it gets in terms of this. Representative Brown.
Mr. Chairman, on page 2, line 9, where it talks about the tax due and being paid in a timely manner, I would like to amend the paid in timely manner to within 60 days after the due date. This, what this would do, there are several people that I've talked to who would otherwise qualify for this if they could get their taxes paid in time. But due to being on a fixed income and with the hyperinflation that we've had, they just don't have the money to get it paid on time. So if they could fall within that extra 60 days, they would qualify for this. So I'd like to change that.
So help me with exactly where and how we
Okay.
change the language,
On-
just so we can get this amendment very
Okay,
clear.
on line 9, take out timely paid and put in within 60 days after the due date. And then to keep that uniform, on page 4, where on line 2 where it says timely paid, put in the same wording.
Let me step back just a second. I want to make sure I get this word right because it's not clear to me. So I'm back on page 2.
Yes, sir.
It says, to
Line 9,
timely paid. So,
timely paid.
so paid within, so really we want to leave the paid, right? And we're probably paid within,
Okay, yeah.
does that
paid with-
sound right? Paid
Yes, just take the
within,
timely out. Paid within 60 days after the due date.
okay.
And then the same
Due
adjustment.
date. So that's, okay, so on line 9, did you get that, Donna? That, I think what we're saying here is whether on line 9, it would strike timely, leave paid, and then after that, we would insert within 60 days of the due date. Or of, or, I don't know if that's the right word. That sound right?
Just for clarification, Mr. Chairman.
Yes.
And Representative Brown, would you like it to read within 60 days of the property tax due date rather than of the due date?
We could do that.
That would make sense.
Okay. And I'll do that on both page 2, line 9.
And page 4,
Director, can you come up, just because I want to make sure we get the right wording if we're going to make that change. Is it, for example, would it be more appropriate to say payment due date, or what would be the right wording there to make sure that's clear? Thank you, Director, please.
Mr. Chairman, I think it's appropriate to consider the timing on this refund program. So let's take 2023 refunds, for example. This refund program requires that the taxpayer put in an application no later than the first Monday in June. This payment for property taxes, first half is due November 10th of that tax year, and then the second half is due May 10th. So if you're paying 2023 property tax, first half is due November 2023, and the second half is due May 10th of 2024. The reason why the date was stated that the due date for the application is June, the first Monday in June, was to empower those folks to pay all of their property tax, because we can't process a refund application if they haven't paid the taxes to begin with. So this would be problematic, that you would move the deadline for them paying their property tax past the deadline for applying for this refund. The refund application has to be in no later than the first Monday in June. We process those applications and provide refund checks up through the end of September. But if they haven't paid their property taxes, they can't apply for a refund that they have not paid.
Representative Brown.
I understand what you're saying. I also understand people who are trying to get this done.
Mr. Chairman, I just encourage them
We-
to apply for the refund so
we-
that they have that income.
There's a due date for applying. The due date also for the applying could be 60 days later. So looking at that, we could adjust that as well, correct?
Mr. Chairman, you could look at that timeline.
So just to give us some feedback on that, it sounds like we, almost the way we do this, you could, with 60 days, let me see if I can say this correctly. If I understand this correctly, you could theoretically apply this to the first payment in November. You might apply it to that, but you can't apply it to the second payment because the second payment and the application date are too close. They're within well, almost immediate, really. But so the issue is we'd have to completely change that application date as well. So moving that down the road, okay, so I think then we can talk about it, Representative, if you want to decide how you want to approach this in this room, or if you'd like to consider how you approach it maybe on the floor, whatever's best. Please let me know what you'd like to do with this amendment.
Mr. Chairman, I'll go ahead and remove my amendment at this time. I think we need to deal with this.
Okay.
There are too many people that are not receiving this refund because they're restricted too much. Thank you.
Okay, thanks. That at least clarification, and certainly can be a further discussion on that. We want to make sure we take care of the people. So, perfect. Any other discussion, amendments, anything in this bill itself? Great. Question has been called. If you would please call for the votes. Oh, second.
This is a roll call vote on House Bill 39, Property Tax Refund Program Revisions. Representative Brown,
Aye.
Representative Campbell,
Aye.
Representative Lean,
Aye.
Representative Lucas,
Aye.
Representative Riggins,
Oh, excused.
Representative Storer,
Aye.
Representative Stivar,
Aye.
Representative Worf,
Aye.
Chairman Locke.
Aye.
We have 8 aye and 1 excused, Mr. Chairman.
Okay, very good. All right, so House Bill 39, Property Tax Refund Program Revisions has passed the committee. All right, let's move on to 38. House Bill 38, Ad valorem tax payment and credit penalties. And Department, if you could come up and just quickly explain, I think this one's fairly simple, I hope. I think so. I think I might have said that before, but who knows?
Mr. Chairman, Brenda Henson, Director of the Department of Revenue. This concept, for this bill, was brought to the committee by Legislative Service Office staff. So when you look at House Bill 38, the language that you see stricken on page 2 that says credited to the school foundation program account. And these penalties that we're talking about here are the penalties that the Department of Revenue assesses on late filers for our annual reports, for public utilities, for our private rail cars, those types of entities that we assess. This has been in statute for years, but Legislative Service Office staff found that there was a conflict in that, and the added language says paid to the state treasurer and credited as provided in Wyoming Statute 81109, and I'll read that statute to you. Penalty, payment of fines and penalties unless otherwise specifically provided by law, all civil or administrative fines or penalties collected under Wyoming statute shall be paid over to the state treasurer to be credited to the public school fund of the county in which the violation for which the fine or penalty was imposed occurred. So we had conflicts. We had this statute that said those refunds had to go to the school foundation, and we also have this statute in Title 8 that says they have to go here. So this is just ensuring that those penalties are going as required in Title 8. And that's it.
Any questions for the director? Great, thank you, Director, for clarification. Appreciate that. Thank you, Department, for all your help on this. And any committee, anybody else want to speak on this bill? All right, we'll close public comment. Committee, what's your pleasure with the bill?
Move the bill.
All right, Representative Storer moves the bill. Representative Stivar seconds that. Any discussion on this bill? All right, questions have been called. If you'd call the roll, please.
This is a roll call vote on House Bill 38, ad valorem taxation, payment and credit of penalties. Representative Brown,
Aye.
Representative Campbell,
Aye.
Representative Lean,
Aye.
Representative Lucas,
Aye.
Representative Riggins,
Excused?
Representative Storer,
Aye.
Representative Stivar,
Aye.
Representative Worf,
Aye.
Chairman Locke.
Aye.
We have 8 aye and 1 excused, Mr. Chairman.
All right, so we'll go ahead and if the committee would just stay briefly after. And is that? I just want to get the right people to carry them to the floor, but I guess that will go for adjournment then. And thank you, everyone, for attending. Appreciate everybody being here. Thank you so much for your time and support. And department, thank you so much for just bringing all these things, making these things clear for us. Everyone have a good day. And again, the meeting is adjourned.